This cannot continue to happen. I've demanded that we went live. Tevis is officially late. No, I'm not joking. He's not backstage. I'm not about to pull him in. He's simply late. But to fill his spot, we have the great and powerful Chris. Chris, why don't you take us in to the stream with a 5-minute monologue of how you got into SoFi? Go ahead.
By song.
Like an improv song?
Mm-hmm.
How about not? But I can tell you how I got into SoFi if anybody actually cares.
Sure, go ahead.
It was actually a coworker. So I had come back. I had to visit a bank branch for some reason. I don't remember what it was. It was like the last time I was ever in a bank branch, and I was whining to my coworkers and just being like, all this stuff should be automated and it should be simple and it should just work. And they're like, hey, you should try SoFi because that's what it is basically. And I was like, okay. And so they sent me at that point, this was back in January of 2020. So pre-pandemic times, and there was no such thing as referral links. Anyway, so they sent me the link and I signed up and I was like, wow, this is really easy to do and way better than all the other banking experiences I've ever had. So yeah, that's how I started.
From that point on, you spent the remainder of your free time writing articles to, correct random trolls on X on their opinions of SoFi. It all started there. But
yeah, unfortunately, I probably spend too much time doing that.
Yeah. Tevis, how you doing, buddy?
How's it going, guys? Sorry I'm a bit late.
I'm just happy you admitted it. That's I thought you were going to blame it on me, like I wasn't going to let you in or something like that. I thought you were going to take that angle. But now that everyone's here, we have a pretty exciting episode today because Chris was able to join us as some schedules lined up very well for us. So we have some free time tonight. We may not have that same opportunity next week, which might be a little bit closer to earnings, but now is good enough. So I have put out a video and I've actually added to some of my things. I have originations now and deposits and stuff like this as per Chris's suggestion. But we're going to be going around and doing some earnings. Tevis, I don't think, has had enough time to put together as much. So I think he might have some members, revenue and stuff. And none of us have as much time as Chris does to put together. Like, he's going to predict, corporate revenue. Crap that I don't even know where he's going to derive any information from. But this is what the man does. I mean, he's something else. So why don't, how do you guys want to get started? Do we want to go down a list of different metrics, or what do you want to do?
I think that'd be good. Apples to apples that way. And if there's a category where I know that Chris and probably you too, Tanner, are going to be more detailed than I am as far as some things I just don't really have a good gauge of what to predict it on. So just I'm not even going to worry about that, just the headline numbers. But yeah, we can dig into it and talk about. And then at the end, we should definitely, just for fun, because nobody can control it, put what we think that the stock price will be the close of earnings day.
So someone brought up a good comment. Doesn't Chris have 5 kids? How does he have more time? I sleep 8 hours a night. Chris, I don't think he sleeps.
I don't remember the last time that I slept 8 hours in a night. I'm going to be honest.
Yeah. He has a pole on the top of his bedroom ceiling and he hangs his feet from it, and he, like a vampire, he types on his laptop and fills in. But so I don't know how he does it. Like you, he probably spends more time on his full-time job and more time with his kids and more time doing SoFi or articles than me. I think I'm just wasting my time throughout the day. But he's very thorough. So, and that's not, taken away from Tevis and Roy as well. They have been extremely busy as well. It's just me that's lacking, really. But why don't we?
This is just like my only hobby is the problem.
Got you.
I'm just that big of a nerd. That's the problem.
Yeah, somebody asked what I did for fun. I'm like, I don't think I want to get into the whole stocks thing with them. But,
right?
That's a weird one to break that topic with to somebody who doesn't know. Like, what do you mean you're into stocks? Like, how into stocks do you?
So why don't we go ahead and do members first? So I'll just start off just because I think mine is already made public. But I said 630,000 members, and then we could just go around Roy, Chris, Tevis, and do the main ones at least. That'll be members, revenue, EBITDA, net income, whatever else you guys want to do. But Roy?
Yeah, you can throw this up there just so people can see where we're heading and going from. I think it'll be a little bit less than what we saw in quarter one. I think we'll see right around 600,000. So somewhere just in the middle of quarter four and quarter one. We have some benefits from the NBA partnership. I know we got a little bit of that in quarter one. But one of the big pulls for SoFi has been the interest rates, which I think the longer we're at this higher for longer level, the interest rate enticement, it loses some steam just because everybody that's chased that already has largely done it. There's still some more, but so 600,000, I think we'll see acceleration next quarter, but 600K is where I'm at.
So this is also weird because this is the first quarter, I think, that we have had members that don't actually line up with the net new members that have actually been signed up. So I actually forgot that they signed on 622,000 because my spreadsheet says they added 590,000.
Net,
but they've actually essentially but they've made 30,000 inactive accounts that they are no longer saying are members on the platform. So which number are we looking for? Are we looking for the number that SoFi is deriving or the one of actual member increases going forward?
Yeah,
The net new members.
Yeah.
Just like Tevis's net new funds.
He's got merch on the way. So sorry, Roy, your net new member count is what? Sorry.
I'd have to do the math. So these are just straight up new members. I know that we're going to lose some just because inactivity. They had new penalties that they instituted on inactive accounts, and and I know that there's some that are leaving for other platforms, just from Invest. It looks like so. I guess maybe we might be at like 550 actually.
550. You're not thinking too well. Actually, let's go through and we'll see the rest of the list, and we'll actually see who's the bearish and bullish here. So, Chris.
All right, so I actually think we're going to get slightly more in the second quarter. I think that the NBA will be a bit of a tailwind, especially because the Celtics did so well, and Jason Tatum is like one of the spokespeople for SoFi. So I went with 640,000. Which is slightly more, and that's new members. Actually, when we talk about the net new members, they did say so. So this was the first, or Q1 was the first time that they ever subtracted out those members, and so basically every member that they would have considered inactive would have come off in that quarter for like the last years, right? So I actually don't think that the net number will be very much. I think it'll maybe be a couple thousand. I could be wrong on that, right? Okay. But I actually don't think there will be a big difference between net new members and new members, just based on 32,000 for years and years of inactivity, right? That they were scrubbing off. I don't think it'll be that big of a difference. And I'm really interested, I guess, just because Roy mentioned the Invest product, I'm really interested to see what actually happens with it, because the commentary from management has actually been pretty positive. Like I went back and listened to the Q1 earnings and the and Chris LaPointe's, whatever it was with Dan Dolev, Mizuho FinTech conference, and they were actually pretty positive on things. They talked about how like AUM was going up and how they're seeing a lot of inflows for their kind of alternative investment stuff. So it's really weird because then when you look at the actual numbers for the last couple of quarters, they haven't been that good as far as member ads. So I'm just curious to see how that actually translates into the numbers. But I do think that Q2, I think that it'll ramp up slowly as far as members go, but I could be wrong.
I like that you brought up commentary about Chris LaPointe, because I was actually going to ask you how he's been.
I haven't talked to him, so you'll have to email him and ask.
Dude, I'm sorry. I'm in a real jokey mood right now.
No, you're good.
I'm going to try running that off a little bit. But I did actually just pull up a chart so then people can see. These are the net I'm not going to keep doing the net new accounts and everything, but each individual quarter for SoFi Invest. This is why this quarter is so interesting. If you guys don't pay as close of attention, is that every quarter we've added some level of new accounts, and actually that was starting to re-accelerate as markets were starting to recover in 2023. Until we got rid of crypto. And then in Q1, I actually don't know what is going on here. It continued to decrease. And I just wonder where we're going to go. So my prediction for this quarter was simply 0, which was sort of a bow out from making any prediction at all, because I have no idea what direction it's going to go.
Yeah, I'm in the same boat. I'm really interested to see what happens, but I don't know how to, especially the Q1 numbers. I don't know how to interpret those, right?
I guess before we go further, like I felt like that on a lot of numbers, to be honest. Like this is the SoFi quarter that I feel less certain about than any of them. I don't know if you guys felt the same or not, but yeah, we'll see. 0 would be good, actually. It's sad, but invest. Chris said that they weren't good. Like they're worse than not good. Like they're terrible. But yeah, if it came in at 0, just flat, great. That's awesome.
Yeah. If we get 0 new invest accounts, stocks going to $10 or $11, as Roy would say.
Yeah.
Canadian. What? Are you saying it's going to crash on earnings? What do you? Okay, so Tevis members.
I'll take the top end of the range. I'll go 650 just for the sake of the top end. I think one other thing to keep in mind is like we didn't have a full season for the NBA partnership. We had the tail end of it. We also had a little bit of golf with regards to Wyndham Clark, and we also had a whole bunch of Copa America games at SoFi Stadium. You had like Brazil, Costa Rica, you had Mexico, Venezuela, and that's a really big tournament. It's like equivalent to the World Cup for that part of the world. So I do think that there is brand awareness. I think the lack of news makes me really hesitant, but I also think that like if you just linearly extrapolate, like, you're at 44% growth year over year for the last 2 quarters. Generally speaking, there is some seasonality, it seems, over the past couple of years. Q2 is stronger than Q1. So, I feel pretty comfortable to take the top end of the range.
You mean for member growth, it's been stronger in Q2?
Yeah.
Cool.
And so, yeah, I'll take the top end of the range. I think also like considering the flywheel and considering the financial services products, like I think they can hit it. I don't think that they're gonna be going back down to the 500,000. Now, I don't know about the whole, net and how many people off board. Like if you subtract all those people out, then yeah, sure. But I'm talking about like just what number appears on that chart. I think I'll take the top end of the range, 650.
Gotcha. Cool.
And they did guide for 2.3 million new members this year, which would be slightly under 600K every single quarter.
So we have 550, 630, 640, and 650.
Roy's the bear.
Well, so
you're an absolute bear, Roy.
Tevis is just doing what's on the SoFi chart. That's 600K from me. So I'm in the 600s as well.
I would hope so, man. 550 is like Q2 2022 is like the closest quarter. You're like,
you thought they were going to lose 50,000 members?
Maybe. I mean, I didn't prepare for that, and so I was just looking at what they lost from quarter 1, and so I didn't realize that was a full year hit. So I would not expect 50,000 at that point. I didn't realize.
Oh, so the runoff was for the full year.
Mm-hmm.
It was for like all the way until that point because they'd never removed any members in the past, right?
Sure.
So yeah, this would be, I think that you're right, Chris. If they're just doing it going forward each quarter, that's like 10, 15,000 that they might lose. I think most of those that left in quarter 3, maybe some for quarter 4 as well, were just crypto, and then just they'd been inactive for a while. So,
see, I never knew that, but I mean, I like hearing it. This is from Chris, which means it's directly from Chris Lapointe. So We heard it here from
That's not
management.
what that means.
He is Crystal Point, right? That just swap out the last names.
Essentially,
That's why
yeah.
I didn't put the last name on there.
Yeah. Jeff says Chris is in an X-ray room.
Or
I think they're basing it on the door. That's actually an ultrasound office. They had it installed in their house just so then they can save a bunch of time heading to the hospital so often. So he's going to have so many more kids. Why don't we... I don't know what kind of mood I'm in today. Let's go on to... Well, some of us didn't do product counts, which is perfectly okay. I said that I believe that their products per user may continue to drop just slightly, but bringing on 913,000 new products. I don't know, Chris, if you actually ended up doing a product count or not, but
I did a total product number. Let me subtract out.
I did
last quarters and see what it ends up being.
12.75 million.
Give me a second. Where is my total products thing? Anyway, well, so my total products was going to be 12.63 million.
Ooh, slower. So
So
you have more members than me and less products.
Because I'm assuming that we're going down to that the products per member is going to deteriorate a little bit just because it's been on a downward sloping curve. I think it'll probably just continue just because we're bringing on more members every single quarter. But I guess anyway.
Yeah, as we
We'll see.
have large influxes of new members, a lot of times they're just coming on with one product, and the flywheel effect is ideally designed to spin off these other products to people that are already members, but that takes time. Not everybody's going to sign up on day one with 5 products. So I agree. I think if my 600,000 number is correct, we might see just a little over 1 million products.
Got you. Yeah, I did put a decreasing amount of products per member. So here, I can just share, but only very, very slightly. If I show this really quick. Where is products per member? So in this line right here, you can just see it was 1.455. I lowered it to 1.45. So almost
1.44.
Gotcha. Okay. Roy, you have a thing up here?
No, that's
just the same thing.
Sorry. I'll stop. Yeah, products is something I don't, care about too much for this quarter. So,
did you say? Sorry, you said products are also going to slightly decrease products per member.
The rate continues to decrease as we have larger and larger influx of new members, just because it takes time for the flywheel effect. And there's some products that they're not trying to push right now. So, if they were accelerating lending, then yeah, we would see, maybe that 1.5 continue. But right now, it'll just be a little softer quarter. Somebody asked, why are we so bearish? It's this is one quarter. It's not one that I think maybe any of us have really high expectations for. I think there's going to be some very good things in quarter 3, but we'll see.
I think just, what? I think there's some people that'll come on and say, oh, you know what? We're going to get, I don't know, and this unbelievable amount of net income and 1 million new users this quarter and all that stuff. But it's, in my opinion, not based on much. And usually and historically, they've just been wrong. So I think what I also like about SoFi is they kind of act very linearly. Like you can kind of trend out how their growth goes. It's not very sporadic. So in my opinion, I actually think we'll be pretty close within that 600,000 member range. And I don't think that saying 800 or 900,000 is super bullish. I think it's just a number that people pull out of the air. Tevis, products per member. Are you thinking this is going to go up or down?
I took the top end of the members range. I'll take the top end of the product range. I'll go, 650 multiplied by 1.465. Let's do it.
1.465.
50 multiplied by 1.465. 952,000 is my guess.
Got you. Hey, I mean, we've had quarters before where we've broken 1 million new products. It's not out of
Had quarter one of them. Not quarters.
Quarter, but a recent quarter, the quarter of Q3 of 2023.
Yep. the Taylor Swift quarter, as we refer to it
Yeah,
internally.
700,000 new members. You guys remember waking up that morning?
Yes.
No.
I do. I remember waking up my girlfriend as if there was presents under the tree and it was Christmas. Sam,
I
wake up!
remember sneaking out of my room to not wake up my wife because she needs her sleep too.
Yeah.
So,
We have 700,000 new members, babe. Wake up.
I think somebody brought up a interesting point too. Like when we were mentioning all the sporting events, like TGL is also starting up, in less than a year or less than 6 months now.
Yeah.
That's going to be interesting as well. It's going to be nice, man. Like, because now we have a full season, like going into this fall season, we'll have basketball starting up. We'll have the NFL starting up. TGL is going to be kicking in January, and it's going to be like that is going to compound on top of itself in terms of the growth.
Yeah.
Sorry. Someone put in a funny joke in the chat and said, well, you were calculating your products per member. He definitely has one. But that being
mine's
said,
on my desk at work. Not
is it?
Yo, speaking of, where's Steven? Isn't he
Yeah,
supposed to be here?
Nobody can know.
Yeah.
Undisclosed location. He's when you're that high in command of the United States government. There's just times when you can't reveal your.
He's in a bunker somewhere.
Yeah. The dude is so secretive. I'm like, oh, nice shirt, Steve. What shirt is that? And then he'll be like, oh, don't ever ask me that. Don't ask a man's shirt or where he buys it from. You're gonna dox me. It's anything. He thinks he's gonna lose his entire identity.
You just got to follow where all the Pokemon cards get shipped to. That's how you find Steve.
Where all the eBay transactions are going. They're all going to one house.
When's the next convention?
Yeah. That being said, we did members, we did products. What's the next one? Do we want to do a technology account predictions? Did you guys do any of those?
I didn't do one. I could.
I didn't do one.
I can
I
pull
did
one
a
out of a
very-
hat if you want.
Roy, if you could bring up the past quarters, if you still have that earnings results open.
1 second.
I'm
We actually
saying
saw a big jump last quarter.
7 million. That's what I'm saying.
Just because you're saying 7, I'm going to say 10.
Okay.
I haven't even seen the chart.
Okay. You're going to take the high end, eh?
Yeah, why not?
I'll go with 7.5 million more.
7.5 million. Even higher. What's that? That must be like a 25% year-over-year change or something like that.
I'll tell you in a second.
Bro,
If
the
you're
high
flat
end
keyboard.
the high end is what
Yeah.
people want to see. I put up a poll in my chat on the members for Q2, and it's 650, 640, 630, 600, and 650 has over half of the votes.
Yeah, but just because
Yeah, of course.
The echo chamber is what people want. Okay,
So
gotta
wait,
give the people what
you're
they
just trying to
Yeah.
feed them exactly what they want. I
You
don't know.
remember,
I
you
think-
remember when Roy was like $10? Like people were talking about that for like 2 weeks afterwards.
It's true.
that's how we got all the Chuck Norris jokes. It's just because he said an $11 price target, and then people are like,
And he was like under the rest of us for most of the predictions, and then he came out at the end and he's like $11.
I mean, we know like the stock market can do anything with the price, and so even if even if things are great or not great, like it can do anything. So that part's just for fun. I'm not finding. I don't see a chart that they have in their Q2 earnings. I know that in their earnings press release they broke it down a little bit, but there's no chart.
yeah, just
They
where you
have
found the
Galileo.
members. It goes members,
Okay, yeah.
products,
I'll
and then
throw that
technology
up.
platform. Should just be the
While we
third
pull that
slide.
up, let's talk about the technology platform in general, though. Like, rather than it's fun to throw out predictions, but like, how do you guys feel about the technology platform? So, if they're assuming in Q1 we had a little bit over 20% growth, if
Just
they're
one
assuming
quick sec. Roy, go to the
20%
go to the
ahead.
presentation, not the press release.
Okay.
Sorry, continue, Chris.
No, you're good. So if they're assuming 20% year-over-year growth for the tech platform in general, it was a little higher than that in Q1 if you're looking at year-over-year. Do you guys think that like each sequential quarter will be 20%, or do you think it'll be slower in Q2 and then ramp up in Q3 and Q4? I'm curious to hear your thoughts.
I have it slowing. The 20% was it was over a week comp, and of course we have a pretty weak comp for Q2 as well. But I had 18%. I think that it'll probably accelerate, but also have harder comps in Q3 and Q4. But yeah, I wouldn't expect 20% this quarter.
But if it doesn't get 20% this quarter, it means that with those harder comps in Q3 and Q4, it's going to have to accelerate even more, right?
Yeah, and I think that's what will happen. That it'll accelerate into harder comps. So, we might see, for instance, 18%, which is not great this quarter. But if we see the 18% in Q3 and Q4, that's great, actually. So,
yeah, I mean, I think if rates start to cut, banks may bring down APYs. There might be a lot of APY plays for different fintechs, and I think that there might be a lot of customer movement. And I think that whenever that happens, you're going to see a lot of Galileo account growth if people are switching to Chime or doing these sort of things that may increase accounts or new cards at some of our larger fintech plays.
I also don't know how correlated this is with SoFi's business, but I mean, working in B2B SaaS, you have to really work with the business cycles that companies have for allocating spend and understand the reality is that Q2, Q3 is kind of slower. And then Q4 is when they have leftover budget. And that's when they buy software, or Q1 when they unlock new budget for the year. And so those are there is definitely some seasonality involved with software purchases. So that could also play a part. The only reason I'm saying I don't know how much it correlates is because you have much larger players in much longer POCs, which could take that theory out completely.
I mean, it's interesting. It's interesting. I don't know how it'll, actually work out that way. Q1 was a pretty good quarter versus Q4, but who knows?
I do think that this will be the first year the first quarter that we get over 100 million in revenue for the tech platform, though.
I also have that.
Which will be, again, people like round numbers, so it'll be cool that'll probably stand out as something, right, that they'll highlight too.
So I put 7 million for that. Chris, you said 7.5. Roy and Tevis, did I catch any numbers? Or
Tevis said 10 million.
10 million, yep.
So that people vote for his answer on his poll.
Yeah.
No. I'm playing the top end, man. So if it's you put 7.5 and it comes in at 8.3.
Oh, you just want to be closest to the actual.
Yeah. You never played The Price is Right?
I watched that show. None of the rest of you did. You're all too young, except for Roy.
Yeah.
I'm going for the actual numbers. I'm not trying to win a game. I'm trying to just guess how many of each.
Trying to be accurate.
Yeah.
What about you, Roy?
I just looked at the overall growth of 18% for the tech platform, so a little bit of slowdown. I don't know what that translates to. It'd be 6.9, 6.8.
Yeah, that tracks. There's definite trends in terms of what you guys think for members, products, and all the way. You're either gonna have somebody who's more on the bullish side and then more on the bear side consistently with all their numbers. So.
And then Tevis.
I think it's hard, right? You have only so many metrics to go off to try to judge some things. It's management commentary, it's website traffic, it's app store download, something like this. And then you also have to judge what they're pushing and products that are needed right now. So,
well, the B2C businesses you can forecast with information that's out there, but the B2B side of the business is a complete shot in the dark because they don't provide any information on that, and nor other than the Galileo press releases of what they're signing, oh, we have a deal with Chipotle, oh, we have a deal with so and so. You can't really deduce numbers from that.
Have you guys been watching the
Exactly.
Galileo podcast that they've been, or listening to the Galileo podcast that they've been putting up?
No,
Some-
I watched a little bit of the one that you posted on Twitter, but aside from that, no.
They're actually really interesting. I feel like I've learned so much more about that part of the tech of the company than like through any other. Like I've tried to do my due diligence on Galileo, but like Tevis is saying, it's kind of a black box often. But those have actually been really enlightening just to hear, because it's with employees, right? So it's interesting to hear them just speak about the products and speak about like it just kind of gives you a better overview of what they're actually doing and what their vision is and where they're focused and that sort of stuff. So they're worth a listen. I mean, they only have like a couple hundred views on YouTube, so not many people are listening to them.
So
Derek White is a stud.
Yeah.
This goes to TJ's question as well, Chris. Is there any sort of quote unquote moat or defensible business at all of what Galileo has, or why does this deserve a large premium?
There is something to be said about, so there, as far as I can tell, there's no other offering. So there are API driven issuer processors, which is one of the things Galileo does. There are API driven there's single core multi-product cloud native banking core providers out there as well. And then obviously there's 3,000 banks in the US, but there's no other company that has all three of those, which I think makes it a unique. So I don't know how, the thing is, I'm not sure how wide the technology moat is right now. And I think that we'll only see that through time. But there is potential there because of that unique product offering that they have, and because they can bundle those different services. And also, I think there is something to be said, especially with the recent like Synapse collapse and everything that's gone along with it. I think there is something to be said for the fact that Galileo can go to their customers and say, we service a fully nationally chartered bank. We do their entire back end, because they do all of SoFi stuff, right? Or they will probably by the end of this year. They're migrating their cores. And one of the things actually they talked about in one of those podcasts is he talked about how they migrated one of their cores for SoFi in less than 2 months. Now, they didn't say specifically what it was, but it was David Foyer, who's one of the the senior execs at Galileo, and like
Chief
that's
product
this type of
officer, right?
stuff. Yeah, I think so. That sounds right.
For Galileo.
But that's the kind of stuff that you don't ever hear from SoFi. But then, you listen to this random podcast, and whatever it was that they rolled out, they were able to do it like very, very quickly. So typically banking core replacements take, again, quarters, right? Because we've heard that from management. So I think there are unique aspects there. I think that they are a unique product offering, but whether or not that resonates with the marketplace, I don't operate in these spaces, right? I'm a chemical engineer. So I don't know, like I can see the potential, but I just have to wait for the data to come out to see if that's actually what's going to happen.
Do we want to go on to revenue? We can decide, or you guys can decide on if you want to break it down on a per segment basis. But yeah, we can do that as well. Revenue, stuff like this. So I put, this actually doesn't look right here. Wait, let me figure out my thing real quick. I just want to make sure I have everything right. $572.5 million. You got to times it by 1,000.
This is adjusted.
570.
572.5. Yeah.
This is adjusted net.
Don't get it wrong.
This is adjusted net.
Yep. ANR.
Okay, let me throw that up so people can see what we're looking at. As you're looking at this, when this pops up, you'll be like, wait. SoFi is decelerating. This number right here, the 581, that was bolstered by a almost 60 million benefit when they did the senior convertible note debt swap thing. So that's why.
No, that was adjusted out. So if you added that 60 million, it would have been like 600. Like their gap revenue for the quarter was something like 645 million. Yeah, 645. So 581 already takes that out.
All right.
Anyone else on predictions?
I have 570. So a little bit under you, but not by much.
Dude, I'm a bull today.
I have 588. So
Yeah, it's the exact same in terms of a breakdown. So I have 585.
Got you. Acceleration.
Yeah, I have a slight acceleration quarter over quarter. So I can break mine down because I did do a breakdown. So
Yeah.
I actually have lending dropping by about 25 million quarter over quarter, which I think is pretty conservative.
You
So
know
going
what?
from
You
like,
probably have corporate revenue doing like 0 or even positive, don't you?
I have it doing like 2 million, and I'll cover that in a second why I think
I
that.
did negative.
Okay, so that'll be a big difference between
Yeah.
the two. So I have revenue slowing down quite a bit to about 310 million because I think that I think we should actually discuss guidance. I actually think guidance is more important than any of the things that we're talking about right now, for the stock at least. But I think there's going to be a drawdown in lending, and they guided for that. I think that financial services has to go up by at least like 20 million if they want to hit their, which would be about 170 million. If they want to hit their 75% year over year targets that they talked about. I do think that financial services will accelerate even more in the back half of the year on an absolute basis, because they're going to be leaning into things like credit cards and spend and other things that right now they've kind of kept on the back burner. And then the technology platform I have increasing at about 18% year over year, which is like 103 or 104 million. And then I have about positive 2 million in corporate revenue. And the reason I have positive corporate revenue is because they talked about one of the reasons that they outperformed on corporate revenue. So it was that they were pulling, so all the money that they got from the senior convertible note deal that they were holding to pay off the 300 whatever it was $1 million in preferred shares, like 330 or whatever it was. That money they just had sitting in accounts generating interest for them. And so the preferred shares weren't actually retired until the end of May, like May 29th. And so for 2 months of this quarter, they would have had that $330 million just sitting, earning something like 5 to 5.5% interest on it. And
Right.
that'll drop to the corporate revenue line. And so for that reason, I think corporate revenue will be close to flat or slightly positive.
So for me to fall in line with any of the guidance, I just set my corporate revenue to 20 because that's what they've been, soaring at. However, I saw you and Vadim talking about this for, the past quarter or so, talking about how they're going to have this extra cash. I don't know. I think that technology revenue is going to accelerate. Like you said, it's going to break 100 million. Lending's going to slow down. I have it at 314 and some change. And then financial services, I have it at 170, nearly 174 million dollars.
Yeah, so that's slightly above mine, and both lending and financial services.
Okay, I'd like to know what you did for financial services.
I just looked at, so every other quarter previously, they were ramping almost consistently at $20 million every single quarter until last quarter. And last quarter, they only did 10 million. And I still don't know exactly why. Like, I've tried to break it down and I'm not sure. So I just assumed that they got back to kind of that steady run rate of about $20 million more quarter.
I only did like 23 million increase. So I'm only 3 or so million behind you.
Okay. Yeah, it's about the same. We're actually pretty similar on most things.
So I think that the financial
except for that corporate line.
The reason why I had an acceleration was because of the amount of SoFi money users that increased. And if the large drop off of SoFi Invest members were inactive, then they were inactive before they got rid of them anyway. So it wasn't an impact on revenue. So I actually think you just got all these SoFi Plus members on. They're going to start to increase spend, bring on deposits, do all the great things that SoFi wants them to do. I think that we're going to start seeing a ramp in financial services revenue. That's just how I saw it.
Yeah, I think I was being somewhat conservative, I think, with that $20 million number, but I think it's close. I mean, 20 to 23, that seems reasonable for me.
Yeah, that's such a we're arguing about nothing. But Roy, Tevis, do you guys have any commentary on what you guys are expecting in terms of maybe beats or misses on financial services lending technology platform? I know you guys didn't, or at least I don't know if you guys broke it down on a per segment basis, but any commentary would be helpful on how you're thinking about what to expect.
Yeah, lending, I think that's going to be a good not a good deceleration, but it'll be a sizable deceleration. So they raised guidance slightly on lending, but it's still 92 to 95% over the year, which indicates more slowdown is coming. And maybe that they reverse that in quarter three if there's rate cuts, who knows? But I think that's what really hurts this earnings, and a lot of people will be focused on that. It's their largest segment by far. So I'm looking at maybe a 92, 93%, somewhere in that range, year over year comp. So tech platform already said 18%, and then financial services makes up, they'll hit that 75% year over year growth. And I know we're not at the law of large numbers. It's the opposite, which is why that 75% looks so good. But I think they'll actually surpass that. We won't get. I think we'll see more of that in the second half, rather, like Chris was saying. And also, to add one point to that, I think member growth accelerates in quarter three, especially, but also quarter four. And so, based on that, a lot of those are going into the financial services right away.
I think it'll actually have to. Like, I don't know, Chris. I mean, you probably have, but try modeling out 75% growth on financial services. It's like hard. Like, it's hard for me to get there without seeming extremely optimistic.
Yeah, and in the Q1 call, they said greater than 75%. They didn't even say 75% plus. They said greater than 75%, which was different, right? In Q4, they did say 75% plus. And so I think they have to be. I think that there's something on the back burner. I assume it's credit cards, because they've talked about it multiple times, right? They've said we're going to start scaling the back end. And the other thing that I did pick up in whatever earnings call it was that I was listening to, I think it was Q1, is that they said they expect that Invest will be the next one to go positive before credit card, which means that they're actually expecting, like, in terms of contribution margin. So they said, those combined businesses have a annual run rate loss of $100 million, but they said. He said, we expect, Invest to become contribution profit neutral first, and then credit card after that.
I mean, I guess it makes sense, right? Like, if the fixed costs are so unbelievably low and they're not investing in it, I mean, then, or sorry, the variable costs are very low and the fixed costs aren't raising because they're not doing anything with it. That's what I meant to say.
And they are doing, like he said, so the new things that they put on, like the THTA, whatever it is, the invest in equities and then doing the derivative plays on top of it. It's like
you're talking
13% dividend.
The option hedging ETF.
Yeah, the option hedging ETF. If you look at the AUMs, they're actually going up. And then they're one of the only two places that you can invest in ARK Venture Fund, which is the only way, like, people that aren't accredited investors can own things like OpenAI and SpaceX and Databricks and all these things. So, and the other one is this tiny little company it's a really, really small brokerage. So if you want, like, if those are the type of assets that you want to look at, like, and that's the type of people that SoFi is actually catering to. Like the commentary, he said, we've seen great inflows, which is interesting considering, the data that you just pulled up where you show these invest members going off. So we'll see, right? But hopefully management seems actually pretty bullish on that side. As far as, like, from here, it seems like things are going in the right direction.
Let's see, what else do we have? EBITDA. Did you guys have any expectations for EBITDA? Maybe you want to bring up the guidance, Roy, from their actual presentation. Once again, it's on the presentation, not the press release.
It's 115 to 125.
Yeah, let me.
I did 137 million, 130.4 million. Sorry, 137.4 million. Chris?
I did 135, which is slightly lower. So last quarter they got 144. I think the guidance was it 115 to 125?
Okay.
I don't have it in front of me.
I don't
remember.
Yeah, it was 115 to 125. Their range.
Remember. So I had 135. I think that because you're going for mix shift, that's a little bit more lending. to more financial services, and lending has a higher margin than financial services, that means that you'll get a little bit less EBITDA this quarter, even though I have revenue accelerating just slightly.
Got you.
Yeah, I have 130, so it's I'm expecting that they'll beat what they guided very slightly, but not by much.
Tevis?
I'll take the top end, 140. Well, I mean, I took the top end for revenue, right? So I was 588 for revenue, so it sort of makes sense.
Yeah. I can't wait till we start getting into like negative things like stock-based compensation and stuff. Oops, sorry. Stock-based compensation. You're like, I'll take the top end. Like, I'll even the top end. And then net income. I did nearly $26 million, 4.5% margin. What did you guys say? Chris?
I have 25 million, and they will still have a dividend payment, I assume, for a portion of this. It won't be 10 million, but it would be something like, I don't know, 6.5 million, because like those preferred shares were still there for 2
I was going to say, you're talking about the preferred shares.
Yeah, so that would come down for whatever the EPS is, but what they call net income would be 25 million.
To all you poor common share owners, okay, you don't get a dividend. This is for special people that don't have special voting rights. You have special voting rights, so they got a 12.5% dividend instead, and that no longer exists. So say goodbye to Qatar and say hello to more net income on the backs of not having to pay out $40 million a year. Did I get that right?
Yep.
I think my numbers were correct there. Roy, Tevis, net income margin, what are we thinking? Cool. What was the guide for?
5 to 10. I didn't.
5 to 10.
Yeah, it's pretty low. I didn't do net income. I just did EPS.
Same.
EPS?
Mm-hmm.
What's your EPS?
I put 1.5 to 2.
1.5 to 2. Okay, so I'll do 2.5. I'll go the high end. Disregard what I said about
Fuck
net
you.
income.
3 EPS 3.
I'm at 2, by the way, 2 cents. I think it'll be slightly under, but it rounds up. So
I'll do whatever the common shares divided by my 25.7 million is, which, yeah.
It's right around 2. We basically all did 2.
Okay.
Once you subtract out that dividend.
Right. What else are we missing? I've got a bunch of stuff on products and stuff, but I don't like that's real nerdy and inaccurate. I just wanted to maybe gauge you guys. I mean, last quarter we had over 500,000 new SoFi money users, by far the highest we've ever seen. We haven't even seen a quarter with 400,000 new users. We skipped it.
Yeah, I'm always curious on the tech platform. I'm curious how much that they are scaling back lending. I hope I'm wrong on lending. Last time I was wrong, and I hope that I was right. So, and I'm curious on invest, like if they actually are able to flatline that'd be great. And delinquencies, if they expect that it will continue to normalize to pre-COVID levels or not, but that has a huge impact for SoFi too. So. And I guess like one thing related to the actual earnings, they always raise guidance. So we know that they're going to raise guidance, but do you guys think it's just going to be like a normal small raise, or do you think that they might raise guidance a little more aggressively?
So, sorry, I was caught in the comments. Raising guidance. Yeah, I think short-term guidance, the Q3 numbers are going to look amazing, in my opinion. I think that things are going to start looking very bullish, and I think that lending is going to return, and yeah, all that's going to look great. But a bunch of people in the comments are saying that we are being extremely bearish on our earnings per share predictions.
I'm pretty sure all of us, maybe with the exception of Roy on a couple of these, but all of us are above what SoFi themselves is guiding for.
By double, I think. I don't think anyone...
We're all above Wall Street analyst estimates is the other thing. So Wall Street analyst estimates are 565 million on the revenue line. 120, I think it's like 123 million in EBITDA, and break even, so 0 cents of EPS.
Yeah.
So all of us are assuming double beats there. I think the guidance question is actually really interesting, and the reason that, so I feel like this phrase will appeal to Roy. I think that for those who had ears to hear, the Noto interview that came that he did with CNBC, so if you go back and you listen to Q4 and you listen to Q1 and you listen to the Mizuho conference and whatever Noto's other thing in Q1 that he talked about, every single time that they said, hey, why aren't you lending out as much? And they kept saying there's all this volatility about rates. First they were first it was going to be higher for longer in November. Then by December we were saying 7 rate cuts. Now it's 1 to 2. Then it's going to be 3 to 4. And if you talk about, or if you go back to the CNBC interview, which was, just a couple of weeks ago, he said multiple times, he said there's like a consensus for where rates are going coming into the market. And to me, that means I'm not necessarily predicting that they will do this, but that raises the potential that instead of pushing things off to 2025 to start reaccelerating lending and going maybe just slightly less conservative route, that in Q3 and in Q4 they might start accelerating a little faster than planned because of that clarity as far as the rates go. I need to go back and pull the actual quotes, and I'll probably cover this. I'm planning on writing a preview article, and I'm really going to try to dig into the quotes and see how much there is there. But I think there's a potential. I don't know if they'll do it, because they are still going to be conservative. They're always going to be conservative, right? That's kind of part of their DNA. But I think that there is a potential where instead of the commentary being, hey, this is a transitional year, which everybody hates the word transitional now in the SoFi community, they might be saying, we are seeing green shoots. We are prepared to start, putting our foot on the accelerator, maybe slightly sooner than expected previously. We'll see. I actually think that, again, we spent a lot of time talking about predictions. I think more important than what happens in Q2 is what they to about moving forward and their guidance for Q3 and the rest of the year, as far as the stock price goes. Because I think that that's way more important for what Wall Street's looking at. Wall Street already expects this quarter to kind of be a bit of a throwaway quarter. I don't think that they're going to, but Wall Street is also expecting really crappy growth from here forward, and not just from here forward in 2024, where they're saying this is a transitional year. They're then saying that in 2025 and 2026, you're only going to be seeing mid-teens growth or mid to high teens growth, which is the opposite of what. So, I mean, management's guidance is we're going to reaccelerate growth in 2025 and 2026, and analysts all have it tailing off.
Do you guys know what the average analyst has EPS at 2026 right now?
43 cents.
43 cents. It's gone down from the last time that we talked about it at 44 cents. It's decreasing continuously.
And so, actually, I think that. Oh, sorry. Go ahead.
No, and SoFi is just increasing increasing guidance. That's all I was going to say.
One of the interesting things is if you look at the trends of future, because analysts always have their future trends for what is 2024 and 2025 revenue is going to be. It's all kind of been coming down slowly because rate hikes have kind of hurt the growth story. Even though each quarter SoFi beats and raises, but if you look at the long tail year and a half out revenue, the analyst expectations have been going down continuously for most of the history of SoFi stock. Right now, I think that they've started to kind of hit the bottom and they're starting to accelerate. And again, if management can hit their guidance, they're going to absolutely crush the 2025 and 2026 estimates that are out there. And so a lot of times the stock price, even though we kind of see it going down and we look at each individual quarter and say, hey, they're beating on all these quarters, the overall kind of long tail expectations for the company have kind of been slowly ticking downward, even as each quarter they're beating. But I think we start to see the opposite right now. And I think that that's part of what would, again, assuming that they do hit their guidance, part of that outperformance would then be reflected in so their 2025 expectations and their 2026 expectations would start to be going much higher. Thank you, David.
This is 2026 estimates right there. No,
Yeah, I really think that we're hitting an inflection point for the company in a lot of different things. And one of them is going to be the fact that they're going to be way outperforming long tail analyst estimates relative to what they've been doing previously.
Can I
Sorry, I'm
answer this
talking a lot.
question real quick? Because TJ said, if they're guiding for 80 cents of EPS in 2026, when and how will they get there? What will kick off this 10x growth? This is a great question. You know what management has said? Them doing absolutely nothing. Them just operating the business as they are right now is expected to bring in somewhere between 55 and 80 cents. So that's discounting for new product launches or new segment launches like SMB or something like that. So
They even said it wouldn't include any new credit card offerings.
yeah, so
which is crazy because then in the same sentence they said, by the way, we're planning on new credit card offerings in the second half of this year, but we're not building it into our long-term guidance.
You got to keep in mind that like financial services is almost doubling every year. Like
not just doubling. Look at the margin. We were at like a negative 90% margin there, like not too long ago, and then we got 2 quarters ago is at a 3% positive contribution margin. Now it's at a nearly 25% margin in 2 quarters, from 3% to 25. You know?
Yeah, it's been really like last quarter, they actually got more contribution margin growth than they got revenue growth. Like the margins were greater, or there was like an extra 13 million in contribution margin and an extra $11 million in revenue. And part of that is because their customer acquisition cost and their marketing spend actually came down quarter over quarter, even though their number of new members came up. And I think a lot of that, I would bet that the vast majority of their sales and marketing goes towards financial services.
Plus, 2026 is a while away. If we don't have rate cuts by then, I don't know what happened, because that's maybe really good. I don't, but SoFi, even though the stock is incredibly rate sensitive, the company itself benefits in a number of lines and new products that they've alluded to, but they've not launched yet just because they're waiting for a different macroeconomic environment. And so lending is not going to forever shrink. They'll be able to open that up. They have a lot more direct deposits coming, a lot more active users. And so they can open that up substantially. And they'll have some, they have far less competition on the student loan front. Like, honestly, when they're wanting to open that up, looking at rates right now, especially for grad plus loans, are just absolutely ridiculous. So through 2026, not just, they're going to benefit there. They have, of course, the mortgage side from the Wyndham acquisition that they've not really done a lot with, just because they've scaled back lending. And it's a terrible time to be a mortgage lender, but that's not going to last forever. And so between that and then also the tech platform, you guys don't know this, but SoFi is not just a bank. The tech platform takes forever as far as the pipeline, but they have things in the pipeline that I'm sure will bring a substantial revenue increase in the future. And so I think that they get there fairly easily. They're so conservative. This is a company we know is going to be around. They know how to execute, and once they flip that switch for lending, it's going to be meaningful.
I don't think, Roy, you meant this whenever you said that they're not doing much with Wyndham Capital, but they've launched VA loans, FHA loans. They launched the home equity line of credit product just recently. They're getting ready. They're getting ready to launch not launch, but they're getting ready for a big influx in originations as rates come down. I know that's not what you were implying.
Revenue. I meant revenue. Yeah. So it's very small still.
And they got that for pennies on the dollar. It was a very cheap acquisition.
Let me ask you guys this, just as a little fun add-on question, just a yes, no. Do you think there's also going to be a press release with the earnings result? Because here's where my head's at, is after they report earnings, I suspect a huge wave of news for Q3 essentially initiatives. I think they could be announcing something as early as that Tuesday, similar to how they've announced, BlackRock. Was it BlackRock? The
securitization.
The securitizations. On the day of earnings, they usually roll out a press release somewhere later in the day, and they have an opportunity to talk about that on the earnings call itself. I think, just like as a little, shotgun prediction, they could be announcing something as early as Tuesday,
what?
July 30th. I
But
don't know
what?
what, but like something, whether it's a new product line or a new partnership, like something to do with the business acceleration that we're expecting to see. A lot of us right now are trying to piece together, okay, where is that acceleration coming in the back half of the year? And they've dropped hints with regards to credit cards. They've dropped hints with regards to student loans. Like they're prepping, and you can see that they're prepping. I think that we're going to see a big drop on earnings day because it gives them an opportunity to also talk about it on the call. What do you guys think?
I think that had, I don't want to say anything over 50%, but I could definitely see that happening. And in fact, I would, in the last couple of quarters, they've been talking a lot about credit cards. I think that it would be the perfect time to release some sort of new credit card and say on the earnings call, hey, look, this is what we're doing on the back half of the year. We're going to be pushing this product. It's insanely high ROE. And yeah. And one other thing about the revenue expectations for financial services, it's revenue. It's not profit. So even if they release a new credit card and throw a ton of cash back at it or something like this, as much as Chris doesn't like the new Robinhood card, putting words in his mouth, but
No, you've read that from me multiple times.
yeah. But the thing is, whether it's good for SoFi or not, or they have great, high amounts of defaults, it will be a great revenue line. Whether or not it brings them into deeper losses, it will go up in revenue. So maybe that's how they get their 75%.
Growth at all costs. Yay.
And I was actually looking at their one of the transcripts from last year. I think it was like Q1 of 2023. And when they asked them about what they were going to do if they got too many deposits, and they talked about SMB, and in the commentary there, like Noto made it sound that they could possibly even have like SMB accounts ready to roll out like in the back half of last year. And I don't think they're doing it because they're being conservative with the current environment, but that's also something that I would bet at this point they have almost completely built out and ready to go for whenever they want to roll it out, whenever they feel like it's the right time, and B, probably they also have to get regulatory approval for it. So, but I like that. That's another thing that, for SMB, that's another thing that they could do, right? Like, I really hope. So if Noto and company and management was really wanted to come out hard this quarter and say that we've seen clarity in the macro, we're going to get back into lending in the back half, and so we're raising our guidance, and we are coming out with X, Y, and Z new products. Like, this is an opportunity. I don't plan on them doing that because that's not typically how they operate. But there is a potential that they could really announce, like, if you want to talk about a short squeeze potential, that's pretty much the only thing that they could do, because right now expectations are really low. And if they came out and said, hey, we're raising guidance, we're reaccelerating on lending, instead of doing 92 to 95% of last year's revenue in lending, we're just going to be flat year over year, that ends up being like an extra $100 million in revenue for this year, right? And that's something they could easily just pull the trigger on if they think that the macro is right in order to do that. And then you do that and you say, we're also going to be rolling out this new product in the next 2 or 3 weeks. And now all of a sudden the sentiment completely changes, also because of the recent run up in the stock, right? Like, there's potential. I'm not planning on something like that happening. This is like the best case scenario for how this earnings would transpire, and I'm not planning on it happening, but like, that possibility is there.
Tevis, Roy, any other commentary before we move on, either about predictions on earnings or something like this, before we get into deposits and maybe originations, stuff like this?
No, I thought we were going to talk about stock prices, what we were going to end on.
Yeah.
Oh, sorry. It's already an hour. Okay. So we'll talk about more of the fun stuff like that in the after hours show. I want to talk about the financial services stuff with Chris after the show. So in the after hours, I'm going to be going through my entire full year predictions. So showing you guys the Q3 and Q4, but that's only if you give me money. Okay, but if you guys want to go see the SoFi after hours show and support the channel, you can either do that through Tevis's channel or myself.
Hold on, are we doing price?
I know. I'm just saying that's how you're going to find it. I'm not leaving. Yeah, price. I don't really think about price that often. So Roy, obviously you got to start us off. You came before the chicken or the egg. What is the price, Roy?
The price when the day closes on SoFi after they do earnings. I predicted famously 11 a couple of times ago. This time, 7.
You think it's lower than today?
I think it's lower than today.
Everybody needs to crucify Roy in the comments. Go.
Ooh, Roy. Ooh, Roy. Tevis?
Price. It really depends on what happens between now, like what the price is going into earnings. Like at close of market that day on Tuesday? Is that what we're doing?
Yeah. The close earnings day, yes.
$8.87.
No, that's exactly what I was going to say. Like seriously, to the penny. All right, then we'll go 888 because
you took the high end.
What's the percentage gain to get there?
Depends what we climb this next couple of weeks.
Yeah, but you guys are expecting a large climb between then and now?
That would be 18% up, 18.5% up from today's closing price. Well, I assume 750. It's like 747 or something. But yeah, call it 19% up total.
Okay, that's not as egregious as I thought it would be.
ETF went 889. So.
I'll say Price is Right. I'll do 886.
What the?
Tevis is definitely not.
Good luck, Tevis.
What makes this really tough is that we have a lot of time between now and then, and it feels, at least to me, like the market might do a little bit of selling off here, and I could be wrong, but just what we saw on Friday. And I think some people are ready. We've seen profit taking in some areas too, and SoFi's risen a lot recently. So it wouldn't surprise me if it gives some of that back, and then we rise as earnings comes back. We may see 6s again before earnings. Just it depends what macro is doing, and if it's a risk on, a risk off environment. Powell comments always. I mean, it just a lot of time. 2 weeks is
the next day is FOMC, right? That's what SoFi always does their earnings 1 or 2 days before FOMC. And
I hate
we're
it.
not breaking that trend again. So, but actually, I think that there's a chance. I mean, we haven't done any macro talk on this today, but personally, I think that they probably should be cutting in July.
Yes.
I don't think they're going to, because I think that they'd rather be higher for longer for too long than right. I think if they say they're data driven, but I think if they were data driven and they were looking at all the jobs numbers, they'd be cutting at the end of July. But I do think that they're going to jawbone and make it pretty clear that they're planning on cutting in September. And basically that's the same thing as cutting itself with the way that markets price things in ahead of time. So there's actually a chance that like you go up on earnings day, and then the next day, instead of FOMC being a giant downer, it actually then boosts the stock even further.
Yeah, the market has priced in 100% chance of a cut in September. So maybe that shifted off of today. I don't think it did. But what I really think is going to happen, I think, we could see lower than right now with SoFi, but that we continue to rise throughout the year as the macro improves for SoFi. And I think that's exactly what's going to happen. So
it's now a 98% chance is what they're pricing it.
So what's it called? In terms of the price, what was I going to say? I had something. I'm just blanking here. Oh, yeah. I think that if I am to, make the sort of bets I'm making on members and revenue and EBITDA and net income, I don't think that it would derive such an unbelievable run up to $9. If my bets were, much higher like Tevis's, then obviously I could get myself to a much higher share price. But I don't believe there's going to be 10 million Galileo clients. So I'm also not going to believe that it's going to run past 9 or something, at least in the short term.
I think
that whole picture, but it's very hard for me to see.
Yeah, I think the two things that matter are one that we didn't talk about, but charge-offs, whether or not that's high enough that it scares people, and the guidance. I think that those, like, almost the entirety of the post-earnings stock price movement isn't going to be very much on how much they beat or if they beat their Q2 numbers. I think it's going to mostly move off of guidance and NCOs, because the bears will come down and say that the net charge-offs are too high and that SoFi has been lying to us all around, and their fair value marks are too high because their management is full of BS and whatever, your standard bear argument for SoFi, which is that everybody's lying to them. Or management is lying to them, and that they're going to push that narrative no matter what, because NCOs are going to be high. And I explained why in one of my articles. If you want to go back, you can talk. It's the one why the bears are wrong that I wrote a couple weeks ago. But the point is that that's where they're going to push.
A bear just recently said 6.7%. Are you expecting anything close to that?
Let me pull up.
I think they said
it's going to be high. It is going to be probably above 6%.
I think they said 6.3 to 7.1, something like that.
Let's see. I kind of did a range. I think.
I can't imagine.
I think it'll probably be around 6.4% ish.
And what's the reasoning for that?
How you roll over the delinquencies. So the way that the two things that SoFi publishes as far as delinquencies and defaults goes, and this is getting pretty technical, but they say these are our 90+ day delinquencies. So that's how many of their loans are not being paid up to 90 days. And then SoFi charges off their loans after 120 days. So that's when they write off the rest of the fair value. And so the thought process is, and how people do these calculations is, they say, okay, if I take last quarter's delinquencies and say they're, call it 1%, right? And then you roll that over and you say, that's 1% who are delinquent right then. So how many of those, and that's on an annualized basis, right? Anyway, the point is that if you say 80% of the loans that are delinquent, that are 90 days delinquent in Q1, we're going to assume end up being charged off in Q2. Does that make sense? So 20% of the people you get back to paying at some point, and 80% of the rest of it, approximately, will default. And then you say, what's the calculation say? So if I roll that forward and I use that 90-day delinquency rate to calculate what I assume will be the net charge-off in the next quarter, the range for SoFi, and the thing is, I can't remember, it was KBW who came out with that analysis. I couldn't recreate their numbers. Like, I don't know what they were calculating, because like I tried to do it every way I could think of, and I couldn't recalculate it. But the way that I calculated the number for that, the amount that they roll off every single quarter is somewhere between 67 and 78%, depending on the quarter, for like the last year and a half. And so that kind of gives you that range of what you would expect as far as charge-offs. In the middle of that range, or about 75, if you assume 75%, which is towards the high end of that range, then it would be 6.4% net charge-offs in the quarter, which is going to be higher than so when SoFi does their fair value marks, they say, hey, we are assuming that 4.9% of these are going to, over the lifetime of the loan, the average annual charge-off rate is 4.9%. It was 4.85% last quarter. And so what the bears can say is, hey, you can't assume that your annual charge-off rate is 4.85% if your annual charge-off rate right now is 6.4%. You're lying to everybody and you're cooking your books. And there's a big, long discussion that we probably don't have time to get into. And it's like, if you want to read it, you can go check out my blog. But I talk it through in pretty great detail.
What's the link? How do I get there?
It's datadinvesting.com. Thanks, Tanner.
No problem.
But the point is that right now SoFi's loan book is the majority of it is during the point where they're charging off the most, right? So there's a delinquency curve, right? So you originate loans and then there's charge-offs and they accelerate at one point, and then during the rest of the life of the loans, they're much lower. And so because SoFi has been building their book right now, most of their loans are in that period where you get really high acceleration.
We're in the
So
peak.
that means that, yeah, we're near the peak. And so for this quarter and maybe next quarter, you're going to have net charge-offs that when you look at that number and compare it to the life of loan charge-off number, it's going to look really big. And I'm 100% certain that you will see people come out and highlight that and say, this proves that the fair values are wrong. And it actually doesn't, but you need to have a nuanced understanding of it to understand why, because it does look scary, right? Like if you were a layman and you looked at this and somebody said, and somebody came to you and said, hey, they are assuming their fair values that only 5% of them are being charged off. And right now they're actually charging off 6.5%. Like that looks bad on the face of it. And it's a really easy argument to make, even though in real, it doesn't actually prove what they're saying it proves. It looks bad. So Anyway, that's going to be where the Bears are going to try to take the narrative, is again, back to this fair value thing, would be my guess. And so the thing that SoFi could do that would totally offset that is to say, well, they're going to reiterate. They're going to say, hey, these are within our 7 to 8% life of loan losses. They're going to say they're extremely confident in it because that's exactly what Chris LaPointe said, a few weeks ago. And they're going to try to reiterate that, but still the numbers don't look good. The way that I think SoFi could counter that is with exceptional guidance. And exceptional guidance, I think, would kill that. Like it's going to be a kind of a fight between those two narratives, in my opinion.
Magnus Carlson said, let's go, Chris, me versus you. You got a chance?
I think all these guys would kick my trash in chess because I haven't played chess in like 20 years.
All these guys.
Except for against my 9-year-old.
Not
I do crush my 9-year-old.
All right, ladies and gentlemen, that is the SoFi Weekly this week. We have one more episode next weekend, and then Monday morning, the 30th of July, we have earnings. Chris, I hope you're there. If you're not, that's perfectly fine.
I'll be there for earnings in the morning. Mornings are easier.
The 30th of July is a Tuesday, by the way.
Yep, Tuesday.
Okay. The Tuesday morning, July 30th. Usually it's a Monday, is it not? Usually?
Last quarter was
Monday.
Monday.
This is the first time it's been on a Tuesday.
Okay.
In
so
like 3 or 4 quarters.
Just go off the numbers, ladies and gentlemen. Roy, take us away.
Later.